I might have just found my next killer stock. It's not a dodgy tattoo food company or a low margin diaper business. Olaplex is an already established hair and beauty company that is producing real cash flow. With the stock down over 77% on the year, I think Wall Street might be undervaluing this company. It's been on my watch list for a while now, and when we take a look at the numbers, we'll be able to see just why this has fallen so much and whether or not it's justified. Now, my name is Sam. I've been value investing for over 5 years now, and my full focus has always been value investing. In today's video, we're going to be talking about Olaplex, and I just want to show and demonstrate how my methods work when valuing a company. So Olaplex just reported their full year 2022 earnings report. So before we break down the company and what they do, let's just get a bit further context on why this stock is down so much and why the performance hasn't been great. Now, the company has had a tough few months, and late last year it warned investors that the company is discounting by rivals, slower growth, and the customer base and other issues were all hampering Olaplex's sales. So its chief operating officer, Tiffany Walden, resigned, and a lawsuit last month also impacted based on the hair loss potential, and it's only compounded Olaplex's performance and unfortunately the misery on shareholders. So for the fourth quarter, results were mixed, and adjusted earnings per share of 7 cents was ahead of the 6 cents predicted. Now, sales of 130.7 million were lower than the current estimates at 133, and this is exactly why performance as of late has also been impacted. So my initial thoughts from this earnings report was very similar to another company I own in Overstock. A lot of macro factors with recessionary concerns are hampering this stock's performance, and while the lawsuit I think could be a slight concern, it's probably unlikely to bankrupt them in the long term. So I think this could be put down to a short-term issue which could impact short-term performance. Now, from my personal experience, I know a lot of girls that can't live without this product. So maybe I'm a little bit biased in that sense, but I've got a small sample, and I think even if you have a small sample, you can kind of determine a good repertoire of the business. So let's get into it a bit further and kind of work out what Olaplex do and whether or not it's got a long-term potential and also great value for us as shareholders. Now, if I just give a brief overview of what Olaplex do, we can get a bit further into the valuation because that's the most important as a value investor. When we take a look at Olaplex, we can see it's a science-enabled, technology-driven beauty company, and its focus is on delivering its patent-protected hair care products to professional hair salons, retailers, and everyday consumers. Now, the brand Olaplex is a proven and potent hair care technology system that restores all hair types to its healthiest state as possible. And the bond building category, which protects, strengthens, and rebuilds broken bonds in the hair, and that will be during and after hair services. And Olaplex was founded in 2014. So it's a relatively new company that has been improving massively when we're talking about revenue growth, but I'm going to break down the financials and all that good stuff. So let's now take a look at Olaplex's financials, break down the numbers, and see just how intriguing this company is. Now, at $3.95 a share, if we scroll down, we can see the market cap is at a $2.6 billion valuation and a $2.9 billion valuation in terms of enterprise value. We're assuming there's more debt on hand than there is cash. So if we now look to the financials, break down the income statement, we can take a look at the numbers. So if we take a look at their revenue, it's gone from 148 million to now 704 million last 12 months. And as we can see, the change year over year has been absolutely phenomenal, ranging from 90 to 100 to now it's 20% roughly in terms of year over year growth. And that is absolutely insane. And this has probably been largely due to the COVID and the pandemic, which has probably accelerated some of that growth. Now, when we take a look at probably, in my opinion, the most intriguing is their margins. Now, if we take a look at their gross margins, we can see they're averaging roughly around the 75 to 80% mark. For a company like Olaplex, that is absolutely fantastic, as that will allow us to translate greater profit from the revenue. Now, again, looking further down, we can see the operating income is also very similar, going from 99 million to now almost 368 million last 12 months. So that's absolutely fantastic. More of that will go to the bottom line, and that bottom line can be used for more optionality in terms of cash, in terms of buybacks, dividends, however the company wants to reinvest that money. If we look slightly further down, if we take a look at their net income, we can see it's clearly translated, with a bottom line of going from 60 million to now 244 million. That puts the valuation at Olaplex much better than another company with lower margins. So you can clearly see the potential in the income statement here. It's a high growth company that has been absolutely destroying it over the last 3 years. Now let's break down the actual balance sheet. Let's break down just to see how much cash is on hand in terms of their assets and their liabilities, and that will give us a better representation of how strong this company is financially. Now, taking a look into Olaplex's balance sheet, we can take a look at their cash and cash equivalents. They've gone from only 3 million in 2019 to now 322 million last 12 months. Now, you may be thinking, well, maybe they potentially raised equity, or they've probably pulled out debt. So this is where they clearly have pulled out debt, as their enterprise value is higher. And if we take a look further down, we can see their long-term debt was expanding as of 2020, but it's slowly reducing as in terms of the last 12 months. And this is largely due to Olaplex being profitable and being able to pay down that long-term debt, which is fantastic. We want to see that Olaplex can service this long-term debt, because typically with that much debt, that would be a concern. But with a company like Olaplex generating close to 400 million in net income, they can clearly service this debt twice over in 2 years, which shouldn't be a problem in terms of actually using this debt as potential to grow the business. Now, again, we can see that their short-term assets and total liabilities, if we take a look at their total assets, they have 1.6 billion, and their total liabilities, there's only 900. That roughly puts the current ratio in terms of a 1.6, which is manageable. If we look further down, we can also take a look at their total equity. Again, has been improving from 18 to now 713 million. And this is exactly what we want to see as shareholders. There's clearly growth in this company, but as a shareholder, we're actually getting rewarded. Now, breaking down Olaplex's free cash flow statement now, we can see the growth in free cash flow has been translated due to the high margins of Olaplex's business. They've gone from 52 million in 2019 to now 254 million as in 2022 and the last 12 months. Now, that's absolutely fantastic growth, ranging from 145% to current 50 to 27%. As the time goes on, it gets harder to obviously grow, and due to that, then the percentage in terms of year-over-year is much less. But this impacts the valuation fantastically, because at a $254 million free cash flow, that translates into a 10 times their free cash flow to actual sales and market cap. Now, this puts the valuation at Olaplex in a fantastic position, and I'm going to get further into the valuation of this company next. The ratios of Olaplex are absolutely staggering, giving a 14% in terms of return on assets. We normally range between 9 being okay, so 14 is great. Again, in terms of return on capital, if it's around 20%, that's fantastic. Anything higher at 25% is absolutely fantastic. And then return on equity, ranging from a kind of a 40 to 37% range. This is just insane. This is exactly what we want to see. And in terms of return on common equity, it's exactly the same. This is all translated due to the high margin business that Olaplex is, with gross margins ranging at 74% last 12 months, EBITDA margins at almost 60%, and then net income margins at 34%. We're seeing exactly that translate into shareholder equity. Now let's talk about valuation for Olaplex, because the current valuation, I could argue, is too low today. If we break down in terms of ticket terminal, we can see that they're currently ranging at a 5 enterprise value to revenue, and typically that would be very high for a company like Olaplex. but due to the high margin business, you can understand why this is here. If we look further down, we can see their enterprise value to EBITDA is at a 10, which is great. But then if we look further down in terms of price to earnings, it's only at a 14. Now, for a company that has been growing absolutely astronomically, that obviously doesn't translate to future growth, but we can take a look at some estimates and kind of break down where this company would be in terms of its valuation. If we take a look at the estimates on Ticker, we can see the next kind of in 2023, there does have a decline in terms of growth of 15%. And this is probably weighing in the stock performance and it also in the reasons I mentioned at the start of the video. But then again, we can see a re-acceleration of growth into 2024. And I'm expecting also further growth going into 2025 and 2026 due to kind of the hair care company and beauty range only ever expanding. Now, it's in a huge total addressable market, and I think Olaplex is perfectly situated. And they're also expanding into the skincare game, which could also re-accelerate further growth. At a current kind of 661 million, that would obviously be lower than what they did last year. But if we break down again in terms of margins, we can see that they're expecting an almost 300 million free cash flow generation at a $300 million valuation in terms of their free cash flow. That would put Olaplex at an 8p. So I think currently this company is undervalued. And when looking at future growth, I'm expecting this to translate into shares. So to add an 8p for next year's numbers, this is seriously low in terms of kind of the historical averages of the S&P 500. They typically range between 13 and 18. So anywhere under that or above that can either estimate whether it's undervalued or overvalued, but that's also dependent on the growth of the business. So to buy this company or not, that is the question. At a $2.5 billion valuation with $2.8 billion including its debt, this stock is very cheap in my opinion. I think at $4 a share, I would be willing to start a position in Olaplex. And if it goes any lower, I would be averaging down my cost. I think one risk I should mention is definitely a company like Olaplex. It's very consumer driven. So whether or not the trends are always changing, if you're able to keep in with these trends, you can identify if this stock is in favor and in terms of growth could potentially outperform in the future. So am I buying this company? Well, at the moment, I'm thinking of starting a position. At $4 a share, I do think there's some great value in this company. And I've seen other companies in the beauty care range that have outperformed fantastic. And I also believe I have kind of an insight with kind of friends and I can understand these consumer trends to a certain extent. So I hope you enjoyed this video, guys. If you like this video, make sure to drop a like and share to some friends. Subscribe, and I'll see you guys in the next one. Cheers.